All right, cool. So let's get into this. All right. Hi. So I think we need to be paying a little more attention to our theory, because I think some people are just not getting their theory right. And these are things I expected people to obviously get very, very easily. Very, very easily. Remember I gave you guys an ice test on this. Yo. I see you trying to convince yourself. It was long ago. Okay? But once you know this, you know this. Right? Did you guys struggle with this? Because not people didn't get as much marks from this as I expected. This was 10 marks. I thought this is free, guys. This is free marks. And the reason why I'm hopping on and on about question 1, this particular section of it, in 1B, if you don't know this type of stuff, you are going to be seeing flames from day 1. Literally from day 1, because we just give you the type of transaction and say record it. So like here, goods purchased on credit, okay? That's all we'll say, and say please record it, okay? So you need to know what type of source document would be generated, and then you need to know which journal is supposed to be recorded in. Does that make sense? Okay? So if you don't know this bit, you can't record it. Does that make sense? And that's why this is so critical. Okay? So remember I told you guys to take pictures in the group of the type of source document and the transaction that would cause that type of source document, right? Please go revisit that for your own sake. All right? Super. But let's get into this. Okay, so what do we think purchase goods on credit? What type of source document would be generated? What type of source document would be generated from purchased goods on credit? Talk to me. An original credit invoice, 100%. Okay. Remember here, you're always asking yourself, are we talking about us purchasing? Yes, we are. Okay. So then it must be an original, because that means we are the customer, isn't it? Original. Okay. Credit. Okay. And then what journal would we record this in? Huh? 100% in the creditors journal. We just bought something on credit. Okay. Right. Then next one, we sold goods on credit. Okay. So this should pretty much. I think somebody said it there, but didn't say it loud enough.
Yeah, just a duplicate credit.
Duplicate credit invoice. Okay. That's it. And then obviously, where is this going to be recorded? Debtors journal. Okay. I'm going to put DJ. All this type. Too early in the morning for this. It's too early. Pay for stationery from petty cash. Petty cash voucher. All right. How do we not know this, guys? Sometimes, remember, this is you are fighting for 60 marks in this test. It's these things that actually make people end up not doing as well or passing the module for that matter. It's not that hard, because people know journals are coming. Okay, so that's why I prepare the slides and so forth, so that you don't spend too much time on the theory or reading through the whole textbook. You just go in, understand, okay, this is generally what's happening. Trust me, if you go through my slides, you won't need to necessarily go through the textbook for most things. There's very few things you actually need to go to the textbook. Maybe because even my slides are referring you to go to the textbook. Does that make sense? But otherwise, from a theory perspective, except for maybe learning unit 1. Learning unit 1, yes, go do the textbook. All right. But Everything else, the slides should be sufficient. So this is obviously petty cash, petty cash journal. Okay, then paid wages by EFT. What's the source document? EFT, EFT confirmation. That's it, in EFT confirmation slip. The answer was right there.
What if you said email, confirmation email?
Nah.
Because technically, when I think of a slip, I think of a physical piece of paper.
Yeah.
But when I pay for anything in EFT, I get an email notification from my bank, or I don't get a piece of paper.
Email confirmation. The thing about it is not necessarily talking about the EFT document. You see what I mean? Like you get an SMS that confirms that payment has been made or money has been received. We don't use that. But that also is a confirmation. You get what I'm saying? So it's kind of, it's not hitting it on the mark.
Yes, so EFT confirmation slip.
It doesn't have to be confirmation slip as long as I can see at least EFT. Then that's cool. No. You couldn't have said bank statement. Because bank statement is a confirmation of so many transactions. All these would typically reflect on the bank statement. Remember, when we pay for these goods purchased, would be on the bank statement. When we have sold goods, because, okay, well, this is on credit, so it won't reflect until the money comes. But here, from the petty cash, okay, this won't reflect because it's coming out of the petty cash, but the cash withdrawal. So it's a bit too vague. Does that make sense? It wouldn't necessarily be wrong.
I'm just asking because, it's our technically the first time you're seeing if you want to commit to the payment. You only see the if you get straight into your bank account, doesn't it?
Sorry, say it again. You will only see?
You only see it on your bank statement because it goes straight into the bank account. It doesn't, for example, with the petty cash voucher. When you pay in petty cash, you get a petty cash voucher. But for EFT, you'll only go straight into the bank account.
So I hear what you're saying, but that's in terms of if someone has paid us. Does that make sense? But if we're the ones who paid, we're definitely going to get an EFT. Makes sense? So I think I would be more lenient towards that one. That definitely is. That definitely, you can say balance sheet. Okay, then return goods to supplier. Okay, let's first put this in here. This is obviously going to affect the cash payments journal. Okay, is the aircon on? Yeah, I'm actually feeling it. It's rather cold. Okay, but return goods to supplier. What's the source document there, guys? Talk to me. Duplicate or original? Which one? Original, 100%. Original credit note. Let me just copy this right here. Okay, because we're the ones returning. Looks. Hey. Technology betrays you. There we go. Okay, and that's going to be recorded where? Creditors journal, are you sure? Creditors allowance journal. Yes. There we go. So that was question 1. Okay. All right. Then this again. You guys, I'm kind of concerned. We spent quite a lot of time on calculations. In relation to that, we have really spent a lot of time there. So, when people don't get these marks, I'm like a bit worried. I don't know what, is it that they weren't attending? Or what? What is going on there? So yeah, guys, I need you to shout the answers to me. What are we doing here? This is exclusive, right? Where are we going to start? Are we going to start with the VAT amount or the VAT inclusive amount? We're going to start with the VAT. That's easier, yes. So what do we say? Remember, we have our formula. Where's mine? What do we want divided by what do we have? Okay, I'm not going to write that up. Okay, let me just write it out. What we want divided by what we have times random amount what we Yeah. So here, what do we have? We have the VAT exclusive, 2000. What do we want? We want the VAT. And here, remember what I showed you guys in Learning Unit 3? VAT exclusive is 100. VAT, 15%. VAT inclusive, 115. So here, we're simply saying to get the VAT, we're saying 15 over what? 100. Okay. And then times 2000, because that's what we have. Random amount. Oh, that's 200. What do we get? Did we all get this? And then the VAT inclusive, we can just add. Yes, otherwise I didn't mark.
No, that's wrong.
It's wrong.
Yes, it's wrong.
What's wrong?
That column is too small for my end,
Hmm?
That column is too small for my end, I've got to put the red in there.
Must put a red. What is this? Is this 300 what? Units? What is it? I'm joking.
Working in accounting,
What is-
so finance.
What is VAT charged in?
VAT.
Therefore, the VAT amount is in?
Red.
Well played. Well played. No, but for real, no, I didn't. It doesn't matter as long as you put the right amount.
I'm just making sure, because you're.
No, it doesn't matter. All right. So this time they've given us the VAT. Okay. 25,000 on VAT exclusive. Okay. Again, we're just saying, what do we want? We want 100. So 100 is going to be your numerator. What do we have there? We have the VAT, which is 15. And then we times it by the 3,700. And she said it was how much again? 25,000. Okay. And again, you can just add. And then you obviously get 28,000. Money. 750. Okay. You were late yesterday, you are late today. Hi. It's Rafa, my students. All right, cool. So this time they've given us the VAT inclusive. Can you see here? Can't ask you everything, but we're testing you to say, do you know how to calculate these amounts? If we give you the VAT inclusive, do you know how to calculate these amounts? If we give you the VAT amount, do you know how to calculate these amounts if we give you the VAT exclusive? And for those of you who chose not to use my method, because every year I get 1 or 2 students who don't use my method, guess what? Now you need to know whether you're dividing by 1.15 or timesing by 0.83, what. See, I know those methods. It's not that I don't know them. It's just that I know that they are harder than these. Can you see now? Because all you need to remember is the formula. What do we want? What do we have? Times what we have, random number. All right? So those who got things wrong here, I think it's honestly because one, maybe you just didn't study or practice this stuff, which would be very alarming because you know you need this for the journals. And there's no way we're going to avoid that in the journals. Fortunately, here they might have said ignore that for you guys. Okay? But it's going to be there in the exam, rest assured. All right? And they did test you on that over here. Okay? So, again, I'm just saying you still have a bit of time. Make sure that whatever method you use is consistent. I'm not saying don't use whatever method you've been using, but make sure that it's consistently getting you to the right answer. Not just when you need to calculate the VAT amount and you've got the VAT exclusive. Okay. Right. Anyway, what are the amounts that we have here then? On the VAT exclusive? 80? 35,000. Okay, and then here obviously the difference between the two, which is about 5,250, right? Okay, 5,250. Okay, and you're done. How many marks was that? That was actually 3 marks. So that was a half a mark on each. Okay. So again, then here, let me zoom out a bit so you guys can see this. Let's see if we're still recording. Everything happening? Okay. We're good there. Okay. So here, guys, here all they were asking us to do is to calculate total and current assets. Okay, so obviously here, like I always tell you guys, when you get a question like this where they listed, all right, your accounts and they want you to calculate current assets, total liabilities, and so forth, so forth, so forth. Okay. First thing I want you to do is to come and say bank unfavorable. What is it? It's a liability. This is going to be a current liability. Next one, debtors control. This is a creditors control. Okay, inventory. Current asset, yes. And then a loan. Okay. Yeah, let's just put it as a non-current liability. Yeah. All right. Yeah, I think it's best to just assume that because they haven't told us how long the loan actually is. Okay. Then that output is what? Yes.
It's every year, so isn't it non-current liability? No, it's within a year.
I didn't say anything.
So what do you classify if it's exactly a year?
If it's exactly, it's going to be short term. Sorry?
And what if it's exactly 12 months?
Okay. Are you sure? I love to hear that. I love to hear that. Do you guys agree with her? She says it's a current liability. Okay. It is a current liability. This is the one that we owe. Okay. Then, obviously, then input VAT is a current asset. Capital. What is capital? Okay, yes, technically you're correct. You're correct. But I want you to say proprietary account. Okay, but obviously it's going to affect owner's equity. Okay. Then here, drawings, same thing. Okay. Okay. Then profit. Okay, that's obviously what we've calculated. You can look at that as income if you want to label it. Okay. Right. So I'm not going to do this because this is something you should know this. Okay. But anyway, since you've got that, you will definitely know how to calculate your current assets. All right, you'll be able to calculate your total liabilities. Okay. So fortunately here, they didn't have to, we didn't have to get tricked out by what is actually going on in terms of our liabilities, whether something short, we're just putting all our liabilities together. Okay. Then, okay, let's move on. Next thing that they asked us, the last thing, and this was a little bit tricky, is they asked us to calculate owner's equity. All right, but they also mentioned in there, I'm just going to scroll up a bit, they also mentioned in there, the above does not include all the assets and liabilities. Why did they mention that to you? Remember, there's two ways to calculate owner's equity, right? I mentioned this in Learning Unit 2, when we did similar exercises where we had to add up all our assets and so forth, so forth, so forth. Okay? I think it was activity 2.4 to be exact. Okay, so what are the two ways of calculating owner's equity? The first one, assets is equals to owner's equity plus liabilities. Okay, this I'm sure most of us probably remember. Okay, but now they've told us that the assets that we have are not the total. Is it the assets? Yeah. The above does not include all assets and liabilities. So it's not only that. So basically, what are they telling us here? You can't use this. Not so. Because in order to find out owner's equity, we need the total assets and the total liabilities to get our total owner's equity. So what must happen? What's the other formula? This is number one. Number two, what's the other way that we can calculate? Does anybody remember? Capital minus drawings. plus. Why isn't this thing moving? Okay, let's just do this at the bottom then. Oh no, I want to put it on line. Plus profit. Okay, and then obviously if this was a loss, it would be minus the loss. Does that make sense? Okay, right. So what is our capital? Did they give us capital? Yes, they did. 15,000. Okay. How many of you guys got this? Or tried to do this? The second method. Okay. All right. Then next one, drawings, 2,000. Okay. Okay, so I don't blame you because there's not too many exercises in the textbook, but now at least you know it's important. Ne? And you won't forget it because guess what? We use the same formula where? In Learning Unit 9 to calculate our new capital balance. Can you see that? Remember I also told you that when we did Learning Unit 9, we use owner's equity and capital interchangingly. Isn't it? So you just need to remember, okay, if I want to calculate owner's equity, I have two formulas. I can say assets minus liabilities, I get my owner's equity. Or I can say capital, which is the same as owner's equity, or we use it interchangeably in a sense, okay? Capital minus my drawings plus my profit or minus my loss is going to give me my owner's equity. Okay, all right, cool. So it's not something I want you to cram, it's just something that I expect you to understand. Okay, so then obviously that then gives us our final answer, which is 18,000. Okay, right. So that again was 2 marks. So can you see it's these small little things that rob you of a distinction. Okay, the other stuff you're going to get most of the question, but it's just these small little things that then just rob you of a distinction. Yes. You know what? That is a very, very good question. Very good. I didn't notice it. Usually I pick up on very, very strange. I don't like this because it confuses the it just makes you doubtful about certain things, and then that same energy carries out as you go through the rest of the paper. So yeah, it's the same thing when they, I believe when you say a loan or when you say an investment, you should also classify. Is it 12 months? In other words, is it a year long or is it more than? But I've seen they don't typically ask questions like that. So yeah, guys, this is another reason why you need to know your stuff so well when it comes to accounting, because there will always be one or two things there that, not outside of us trying to make you apply, but also one or two things that maybe the question is not very clear, all right, or as precise as it should be, all right. So yeah, there's really nothing we can really do about that, but I know you just were bringing it to our attention, but those type of stuff actually, they do annoy me because I obviously try my best to prepare you guys for these assessments, and I like to believe most of you really do try to do your best as well. So when we meet things like that, that's outside of our control, it's not fair because it's not a fair assessment to you. Okay, right. But let's proceed. Sorry, I went on a bit of a rant. Okay, so your question 2 was now the journals. Okay, and they asked you to do, if I recall correctly, it was your debtors journal, debtors allowance journal, and there was another one. Just the debtors and creditors. Let's see. Debtors and creditors. Yeah, it was just the debtors and creditors. Okay, but then the key things that they wanted us, so this was the company that you're doing it for. They were on the periodic inventory system. I'm actually happy they asked this because it's giving us a chance to quickly discuss. Okay, and then there was no markup, no gross margin. Okay, and then there was VAT. Was there VAT? Yes, there was VAT. Okay, so it was the higher certificate students who had no VAT in their journal question. Yeah. So yeah, as always, now at least you also got an opportunity to actually see transactions and then have to label them. If you haven't been practicing, then you haven't been labeling transactions. If you have, which I believe most of you have, then obviously this was another opportunity to understand what I meant when I said, read through all the transactions and label them for which journal they're supposed to go to. So here, purchase goods on credit, okay, for 5,000, excluding that, all right? So immediately here we know, okay, I didn't mean to zoom in that much. Okay, let's just do this. Just want to make sure everybody can see. Okay, I think that's fine. Right. No, I want to see the date as well. Okay, cool. I think that's cool. Right. So, purchase goods, all right, on credit, okay? The fact that we're purchasing, where should that go? Creditors journal, okay? Then, sold goods on credit, okay, for 1,380. Where is this supposed to go? Debtors journal, yes. Next one, invoice. The invoice for goods purchased from was undercast by 2,300, including that. Creditors journal as well. Okay. Okay. Then we go to the next one. Purchased goods on credit. Already you should be knowing. All right. From Edge Traders for 10,000, excluding that. Creditors journal. Okay. Sold goods on credit to Miss Diamond for 4,000, including VAT. Okay, so here again, they were testing you on VAT because sometimes they're saying it's inclusive of VAT, sometimes they're telling you it's exclusive of VAT. Okay, EFT made, okay, for 50% on the amount owing. Okay, where is this going? Are you sure? EFT made. Are you sure? We made the payment. Yes, we are owing them. But where do we record payments? Okay, you see. So remember, we only record in the CJ when we bought something on credit. We're recording that transaction that we've actually bought this lovely water bottle from him on credit. Does that make sense? When I pay him, where do I record it? CPJ. Same thing with the debtor. I've sold him a cell phone on credit. When I sell him the cell phone, where do I record it? In the? When I've sold to him on credit, where do I record it? The debtor's journal. When he pays me, where do I report him paying me? CRJ. CRJ. Cash receipts journal. Okay.
So you know what, I think the problem is.
Yes.
Because it's just a facial, they're going to face it and they can sell it and so that's how you do it. Minus liability to
Oh, that's a very big problem if we're thinking like that. It's a very big problem. Because perpetual, all we're saying is, when we say perpetual inventory system and periodic inventory system, all we're saying, the only difference is how we treat inventory. That's it. Okay. Otherwise, we're not saying that, okay, we're going to do the adjustments right underneath each other consistently. Does that make sense? Okay. But I'm sure now you're picking that up already. All right. But I'm glad you're also mentioning it. That's why we do revision. So that we can obviously fine-tune these things and prep you for the exam. Okay. Then purchase goods on credit. Purchase goods on credit. Okay. From the lease LTD for 3,450. Where is that going? CJ. Okay. Right. So already you can see there's a transaction that we don't even need to pay any mind to. Why? Because we're not doing the CPJ. When you see that, so this just saves you time. You're never going to need to look at this again. Okay, does that make sense? And we're always going to do this 9 times out of 10. Let me say 8 times out of 10 actually. We're going to throw in a transaction you don't even need to pay any mind to. Because what are we doing? We're testing. Do you know your CPJ? Do you know your CRJ? Do you know your cash, your creditors adjustment journal? Because if you know this is supposed to go to any of those other journals, then chances are you will also know how to record it correctly. Does that make sense? So that's why I keep telling you guys, we don't need to test you on everything, but the few things that we'll test you on, we will know whether you actually know your story or not. Okay? All right. Again, I'm just sharing that with you because I'm trying to expose these tricks. Remember what I told you at the very first lecture? I said, we're constantly going to be trying to see you apply. Sorry? That's how you lose your marks, 100%. Because you're going to get most of the stuff or some of the stuff, but then you lose some of the others. Remember what I said yesterday? We're doing this now. Sorry. We're doing this now so that when you get into the exam, you've already understood, okay, this is what I need to know, how I need to approach it. This doesn't work, this works, and so forth, so forth. Okay, so we've labeled our transactions, and now we get into our first journal, which in this case is your debtors journal. Okay, so now it becomes very easy because now you're just like, okay, cool, time to report. So the first one happened on the 6th, and on the 6th it was sold goods on credit to Mr. Emerald for 1,380, including that. Okay, so we come here, they didn't give us the doc number, so we leave that blank, we don't need to worry about that. 6, and then we obviously write who we transacted with. Okay, folio doesn't matter, we'll report that when we receive cash, okay, in the CRJ. Then debtors, we plug in the amount. Remember here, debtors column always VAT inclusive. Wherever you are, debtors control is always VAT inclusive. Okay? Then we have out from that because we just made a sale. Remember they told us that we are a VAT vendor. Okay, so we have to pay that and also receive that as well when refunded. Alright, so here we're only saying 15 divided by 115 because it's VAT inclusive, and then boom, we get that. Then our sales. And again, because we're on the periodic, guess what we don't have here? Cost of sales. So remember I told you guys, if you know your story, you'll find that the periodic table system, particularly with the journals, like both, even with the accounting equation, is actually easier because there's less work that you need to worry about. Think about it. No markup, no gross margin. Is that not easier? That means the only calculation you're worried about is what? That. You see? So, there you go. But this, I think, was a bit easier for you because we've given you the structures. So it's just about plugging in the information where it's supposed to be. Sales is always going to be VAT exclusive. Okay. Yes? Sorry, I can't hear you. If you ever write? Yeah. I would never imagine that they do so because they haven't done that. I know with your assignments, they made you guys do it. That was a recent change. The reason why they did this is they're like, no, you guys need to, show a little more effort into understanding the front. And because it's an assignment, you have time to actually go and compare and see, okay, based on this question, this is how they answered it, this was the structure they used, and so on. Okay. But yeah, I don't imagine that they do that. I don't want to say no because then some people might begin to relax and say, oh, we got this structure. It could happen, but I don't imagine that. I know that from second year onwards, you need to produce your own structure. So if you do decide to do accounting, my friend, take note. Take note of that. Okay, you'll have to do your own structures from second year onwards. Okay. Huh? I don't know. I've never seen that module. I think that's brand new, right? Because in the years past, this would be the end for you. First year, counting, you have both semesters and then start. So, I don't know.
You have accounting 2B, they have 2B.
So 2B, not 2, there's no TA.
No, there is.
So you have,
Now, 1B next semester, 2A second semester. It's not.
well, it's fun. We've been having a good time. So, I mean, either way, fun times, ne? All right, let's proceed with this. Okay, so then on the 13th was our second transaction for the debtors journal. We sold goods on credit to Mrs. Diamond for 4,600 including that. Okay, so straightforward, plug in the inclusive of that amount, calculate your VAT exclusive, your home and dry, Mrs. Diamond. No rocket science over there. Let's see. That was 5 marks for you right there. Next one, creditors journal. Okay, there they had a little more stuff for you to do. Okay, just ignore those calculations. That's actually so I copied this from other exercises before amending. So here was your creditors journal. Okay, and then in your creditors journal, what was going on over there? In your creditors journal, yes, a lot more, definitely. First transaction happened on the 5th, and there they said purchase goods on credit from Survey Limited. All right, for 5,000 excluding that. Now they needed to, now here they were testing, say, do you really know where these amounts need to go? So obviously here, no problems under details. We know what to do. We know that creditors control is supposed to be inclusive of that. All right, but you know purchases, can you see? We're on the periodic. This should have been what? Trading inventory. Okay? But we're on the periodic. So 5,000, we know that's VAT exclusive. Okay? So you could start here. And this is what I was trying to show you as we were going along in the journals. To say, sometimes we'll start with the VAT amount. Just to show you, you can start anyway, but what you need to know is what needs to go where. That's it. Okay. So 5,000 there, then you say, okay, you could even start by saying, let me calculate my VAT inclusive amount, and then I'll calculate my VAT. Or you can just say, no, let me calculate my VAT first, and then come here. Does that make sense? Okay. So that was that transaction. Then we go on to the 12th. It says purchase goods on credit from Edge Traders for 10,000 excluding VAT. Okay. Again, they're testing me. Okay. So that was it. Oh, sorry, I skipped a transaction. On the 7th, they said that the invoice for goods purchased from Survey Ltd was undercast by 2,300, including VAT. Somebody tell me, what do we mean when we say undercast? There was too much.
No, it's too much.
You say too little? What do you say? You say too little? What do you say? Huh? You agree with it? Are you sure? Hey. What do you say? Too little.
Undercast is too little. Overcast is too much.
Are you sure?
Yes, because when it's overcast outside, there's clouds. When it's undercast, the sun shines.
Use this as an example. So,
On this simply means below, over means above. So undercast means
What do you say? What do you say?
Okay. Under means below. Over means above. Undercast, below. The amount.
Do you agree with it? What do you say? Too little. And you? According to you, I've always put it there. I don't mind you moving, okay? The answer is too little. It's less than. Overcast means more than. So despite the fact that somebody said you talk weird, his explanation was actually spot on. Over 100. You see, you keep bringing your high school things.
But this is a 15 years later.
It's the sign. I'll show you the sign.
You see, I'll be very honest with you, right? I'm not necessarily talking to you because you did pass. But the guys who come with that tendency of, me, I did accounting, they're the ones who perform the worst. No, and he performed very well, so he knows that I'm not taking jabs at him. But that's been my experience. Because they're like, I know this thing, I know debits, I know this thing, I know this thing. And I'll be very honest with you. Like she said, if you search on Google, undercast means less than. So I don't know what you were learning there in high school. I don't know. Huh? I don't know what you were learning there. You see, but it's those small things. Also with that calculations as well. They've been taught a certain way, right? And you find that that's harder than, you get what I'm saying? So just be very careful. And I'm saying this generally. I'm not necessarily speaking to him because I know he's doing his job. Okay? Yes, ma'am. Understated, same as undercast. 100%. Too much. Okay. All right. Let me just quickly check here to see we're still recording. Okay. Awesome stuff. All right. So I just want to finish this, and then I'm going to give you guys a break. Is that fine?
Yes.
Right. So we finished. We were just talking about it. So basically, what we were saying here, if it had been overcast, do you know where this was actually going to be recorded? The CAJ, Creditors Allowance Journal. Yes, it would have been like we record, because basically what they would be saying is we were overcharged. So they owe us money, or we need to reduce what we owe them. Because remember, we didn't pay them cash yet. Does that make sense? No, it wouldn't be debtors, because remember, we are reducing. Remember, creditor is someone that we owe. So we haven't yet paid them. So what we're then saying is, okay, basically, if I owed you 5,000, but then we realize actually you charged me 2,000 extra. So because I haven't paid you yet, instead of you now owing me, I'm just going to say, okay, minus 2,000 to make it 3,000 that I owe you. Makes sense? Okay, super. So here, because we actually owe them more, because it was understated, it was below what it should have been, we're then saying, let's put it in the creditors journal. Okay, so you put the 2,300 over there, okay, because that was including that 300, that's the VAT amount, and we're done. Okay, all right, then we move to the 10, not 10, sorry, the 12. Purchase goods on credit from edge traders for 10,000 excluding VAT. Okay, so we already know purchases, VAT exclusive amount, calculate our VAT, and then we obviously have our VAT inclusive amount there under creditors control. And we've obviously put in the details of who we transacted with. Cool, no problems over there. We move on to the 29th, last transaction there. All right, we purchased goods on credit from Venice Ltd for 3,450, including that. Okay. So again, just plug in who we transacted with. This should be Ltd, not KTD. Yeah. All right, and then obviously VAT inclusive amount under creditors control. Then you got your VAT amount, and then finally you got your purchases over there. All right, so yeah, that was your journal. That was your journals. And how much marks did they give you there? Okay, so there's just one more question there for 5 marks. So it was out of 20. Okay, but we'll deal with that when we come back from the break. Let's take a break. So guys, if I can see you by 8 past, we're gonna finish early. Okay, this is all we really have to do.